Hello everyone and welcome to Business Africa, the show that informs you on the African economy. Coming up today, Nigerian struggles with declining economic growth due to insecurity and a fall in the price of a barrel of oil. In entrepreneurship, we follow the inspiring story of Ghanaian Emmanuel Kojojo Ankoma, who offers home hairdressing services in the streets of Accra. Ethiopia is turning to drastic measures, including energy rationing to curb power cuts. With public debt already estimated at $67 billion at the end of 2018, Nigeria's growth slowed in the first quarter of this year to 2.01 compared to 2.38 in the fourth quarter of last year. This situation is partly due to the decline in oil revenues, the increase in the budget deficit, and above all, the drop in foreign direct investment by 36% compared to 2017.
Les détails de Naya Gomo avec Hélène Wangalwa.
Nigeria's economy has slightly contracted in the first quarter of the year by 37 basis points to 2.01%. This slowdown has been attributed to the contraction in the country's biggest foreign exchange earner, the oil sector. According to the National Bureau of Statistics, annual pace dropped from the previous quarter when activity was likely to have been boosted by state spending in the run-up to February and March elections. Meanwhile, the oil sector has declined every quarter since the 3 months through June 2018. The economy is recovering from the 2014 crash in crude prices, and the International Monetary Fund forecasts that growth will accelerate to 2.1% this year from 1.9% in 2018. Nevertheless, Nigeria's central bank predicts growth of 3% for 2019. Africa's biggest economy recently came out of a 15th-month recession. According to analysts, the ongoing recovery is set to gain momentum this year, largely on the back of improved consumer spending as household incomes benefit from the planned increase in the minimum wage. The government is also keen on diversifying its revenue base through tax reform, increasing non-oil revenues and securing oil revenues. In the first quarter, the non-oil sector grew 2.47%, while the oil sector shrunk 2.4%, according to the Statistics Office.
We are joined by Serge Alain Godong, an economist specialist in governance and public policy, to discuss this further. Hello and welcome to Business Africa.
Hello, and thanks for having me on your show.
Nigeria is currently experiencing a decline in economic growth. How can this be explained when the gross domestic product is clearly increasing?
There are several reasons for this. You know, Nigeria is an economy that is very highly dominated by the exploitation of cash crops, in this case oil, which accounts for about 70% of the GDP of exports. So there is an extremely strong sensitivity of the economy of this country towards specific products. And you know that although after the serious crisis 3 to 4 years ago, when oil prices dropped drastically on the international market, there was a slight rise to around $70 per barrel after having been a little below $50 per barrel. We have gone up around $70 a barrel, but it is something that is under tension because, as you are aware, like anywhere else, that there is a strong international geopolitical tension between the United States and Iran, and there is also tension between the United States and Venezuela, which is a major oil extraction point. So all this makes oil prices play into tango and greatly destabilizes the predictions and revenues that a number of oil exporting countries can expect from this product. The second source of negative impact on Nigeria's economy is also security issues.
With debt already estimated at more than $67 billion in 2018, do you think Nigeria can achieve its 3% growth target this year?
Yes, several elements can allow this country to reach this level of growth, such as the outbreak of a massive attack by the United States on Iran, or the rotting or worsening of the crisis in Venezuela, for prices to rise from $70 to perhaps $100 or more. But Nigeria enjoys a series of advantages that allows it structurally to perform at a high level in the African economic space. First of all, It has a particularly strong internal market. It is a population of around 201 million people. Second, it is a country that is known for dynamism of its companies and its entrepreneurs. So it is a country that has a central position in the Gulf of Guinea that gives it a substantial export capacity.
What measures can the country take to accelerate its growth?
The question for Nigeria is a bit like that of all African countries. African countries are seeking to increase their overall level of participation and the quality of their participation in international trade, etc. The avenues that propose Nigeria develop more substantially exist are a bit slow to talk about industrialization, about improving productivity, labor, and so on and so forth. So these are all things that are known, but it is a country that will only find its balance after having resolved the security issues that is fundamental today. A country develops by the capacity it has to have an economic attractiveness that allows it to attract foreign investment. But again, Nigeria has natural advantages that are strong, that are robust, that also stem from its tropism towards international markets, which stems from the quality of the dynamism of its population in the entrepreneurial sector. So all this means that it is a country that can only almost automatically take center stage in the economy.
Thanks to you, sir, for this insight. Serge Alain Godong is an economist, a specialist in governance and public policy, speaking to us from the city of Kribi in Cameroon.
Thank you, madam. Have a good day.
Ethiopia has now embarked on finding alternative ways to continuously supply its population with electricity. More details after the break.
Dans quelques instants.